5 tips for investing as a college student. Number 1, invest in your knowledge. If you don't have the time or resources to invest during your college years, remember that the best investment you can make is in yourself. This principle applies equally to students who have the time and resources to invest. Depending on your major, you may discover that your college studies directly contribute to your investment education. Others may require innovative approaches to finding overlap between their investment education and their college curriculum. Regardless of your chosen field of study, if you approach your investment education with zeal, many industry professionals will be eager to answer your questions and assist you in your growth as an investor. Experts strongly advise all student investors to attend networking events and connect with industry professionals. Learning from the world's greatest investors is another way to expand your investing knowledge. Many people choose to base their knowledge on Warren Buffett's mentor, Benjamin Graham's value investment methodology. The most frequently recommended book is Benjamin Graham's The Intelligent Investor. Another classic is Graham's 1934 book, Security Analysis, which he co-wrote with David Dodd. Experts recommend studying Warren Buffett's letters to the shareholders of his holding company, Berkshire Hathaway, to get a sense of how value investing has evolved since Graham's time. The letter explains how Buffett implemented and expanded on Graham's value investing principles. These letters are especially useful because Buffett admits and reflects on his mistakes. Buffett's letters to shareholders, along with Graham and Dodd's classic text, provide a well-rounded introduction to the theoretical foundations and practical applications of value investing. Number 2, pay your college debt first. The majority of college students around the world graduate with significant student debt. College education is expensive, and students frequently accumulate debt in the thousands of dollars. As a result, if you are a college student interested in investing, you should pay off your debt before putting your money at risk in the financial markets. This is because paying off debt has a guaranteed return, whereas markets are not. For example, paying off $10,000 in student debt with a 15% interest rate is equivalent to earning a 15% return on the debt amount. This is a $1,500 return because you will no longer have to pay any future interest on that debt. It is extremely difficult to get a 15% return on investment if you invest that much money in the markets. As a result, if you are a college student interested in investing, start by paying off your student loans. Number 3, open up a trading account with a stock brokerage. After learning the value of money, how the investment world works, and accumulating some capital, you may be ready to invest in some real stocks. The first thing you should do at this point is open a trading account with a stock brokerage. There are 2 primary options. You have the option of opening an account with an online discount brokerage or visiting a traditional brick-and-mortar brokerage. Online discount brokerage allows you to trade using a computerized trading system. A traditional brokerage, on the other hand, provides personalized investment advice as well as additional services. As a first-time investor, a teen or college student should seek out a discount brokerage. This is due to the lower initial capital investment. Furthermore, you are only charged for sales or purchases made. With everything moving to the internet these days, an online investment brokerage account is far more convenient than traditional brokerages. It is an ideal way for teens and college students to start trading because it allows you to make trades from your computer or smartphone. Number 4, adopt a time-constrained realistic strategy. A thorough investment analysis necessitates a significant amount of focus and time. As a student, you are unlikely to have the time to conduct extensive research. Adopting a strategy that you can realistically implement in your limited free time makes sense. The most basic strategy is to invest in a portfolio of diversified investment funds such as index funds, exchange-traded funds, or mutual funds on a regular basis. This approach may be advantageous for investors who do not want to perform in-depth analysis of individual investments and would rather delegate the more laborious aspects of investing to a third party. Investors who want their funds actively managed, on the other hand, will have to pay for the service in the form of higher management fees. Students who work full-time and want to manage their own portfolios will need a time-efficient investment strategy. A third option for students who want the experience of hands-on investing but lack the funds is to invest using online simulators such as Investopedia Stock Simulator. Simulators are a great way for investors to try out new ideas without risking real money. Number 5, track some stocks on your own for enjoyment and learning. This is a tip that can help teens get their feet wet in the investment world. It is critical to select and follow some stocks of companies that sell products that you are familiar with. Teens can choose companies that are well known, sell products they like, and have the potential for healthy growth. Examples include Disney, Coca-Cola, and McDonald's. Simply recognize their stock symbols and track their performance over time. Make sense of their performance in light of current events, financial reports, and economic conditions. This teaches you how to analyze a stock and the factors that influence its performance. This is a fun and relatable way to learn about the stock market and how to trade. Learning to invest while in college is difficult. Students who approach this challenge with a clear sense of purpose, a realistic investment strategy, and a willingness to learn from the best can use their college years to lay out a solid foundation for their future investing. Who can say? Students may one day be studying your investment philosophy.